right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Sorry, I have to let me switch over to some. So General Motors beat, looks like they beat expectations pretty well. It's not really helping futures at all. Actually, futures have come down. Let's take a look at the E-mini futures really quick before we get into the actual charts. See, E-mini futures are just kind of rolling over here. Keep an eye on that. You can see a little bounce here after we took out the overnight lows, but E-minis look a little weak. That's a 5-minute chart. Here's an hourly chart, so you can get a better view of what we're seeing here in the S&P. So I remember talking about the S&P yesterday and saying now that we've broken, now just bear with me for those of you guys that are trading currencies. This obviously matters when you're dealing with equities because we're now more concerned about what's happening with risk appetite. Okay, but remember we talked about this horizontal resistance in the S&P. Let's go over to an hourly chart. We had this ascending wedge, if you will, something to look like this, right? Okay, and we were talking about the market making. We were making for the longest time. We were making basically higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And then all of a sudden we made lower lows. So now that we made lower lows, now traders are selling into rallies, and that's exactly what we've got right now. You had a rally back. Do it like this. So you had a rally back to the 50% retracement, and the 50% retracement is stalling the S&P now. Okay, so just keep that in mind because risk appetite doesn't look good. So if risk appetite doesn't look good, the yen might start to gain some strength. Will the dollar start picking up some steam again? It's questionable, but again, when people realize that, oh crap, this is more selling than just like a pullback, that's when the dollar is going to turn bid, and we just don't know when that mentality changes for the market. Okay, but we have to be on the lookout for it, because once that mentality takes hold, grips the market, like, oh, whoa, wait a second, this is not your just everyday pullback. This is actually we're actually pulling back. Like this could be the start of like a 5 or 8 or 10 or 12% retracement. That's when you start getting that appetite for dollars. Okay, should that happen? I don't know where that mentality changes. I don't know where that flick of the switch happens. But I'm assuming now that we're seeing a shift in trend, a trend up to maybe trending lower, that mentality could hit the market at any time. And then if you're stuck short the dollar and that risk aversion, like scared crapless mentality hits, then you don't want to be short the dollar because the dollar will go bid, and you'll wonder what the hell happened. All right, anyway, just some food for thought. So let's go over to the euro dollar. The euro dollar has backed up to the 110 level where we're currently trading. Now I want you to notice a couple of things here with the hourly chart. So here's the euro after having our really big recovery at the 108.20. Okay, there's the 108.20 level on the hourly. We hit that low at 2 days ago, 108 in Asia, 108.70, or it was yesterday, at 108.70. That proved to be a really, really good place to be on the long side. We hit new highs, but and let's pull this up here really big so you can see it. Look at relative strength now. Okay, so this is the RSI, and this is not the only reason to be trading on the short side, but you have to keep this in mind now. You got relative strength is now divergent, moving lower, where you have price moving higher. Do you see that? Price is going up, relative strength is, not. Okay, it's trending lower at this point, especially if we reverse here. Now that doesn't mean we can't go higher. We can. I mean, the euro could quite possibly make it to 110.10 or maybe 110.60, like Paulie was saying, is maybe up here towards this resistance. Possible. And if it does, relative strength is going to end up peaking out in probably pretty overbought territory. So what I think for today, there's a couple resistance levels that we'll have to pay attention to. First of all is 110.10, which is right here. I mean, but we can surpass that. We have weekly unemployment claims today. We also have Canadian retail sales. You know, that's another piece of news that's on the docket. So which could influence the dollar a little. But 110.10 is resistance, then 110.60. So we got, but whoops, we're going to my bias chart here. Resistance 110.10, 110.60. Okay, still in a range environment. Okay, up against resistance, and also keep in mind this downtrend line, but that comes in at like 111. So if we get up to, see, if we get up to 110.60 today, I think you got to look at that as a blessing. Think about this. Okay, if we can make it up here, okay, you got to look at that as an opportunity to be on the short side. If the euro can make it all the way up there, that's about another 60 pips from where we're currently at. That is that's the place. Ultimately, you'd want to be short. You know, at that point, the Greek gods would be singing. Do you know what the Greek gods sound like? God, I haven't heard the Greek gods in a while. Oh. Oh, mind you, it's 4:30 in the morning. Oh, the euro dollar got up to 110.60, and it looks like a good short. Oh. Yeah, well, for those of you that are relatively new, okay, just if you're like this, I have a lot of people that have been only listening for the last couple of weeks, and you're probably going, oh my God, what's wrong with this guy? I got married in Greece. If you didn't know that, I got married in Greece 13 years ago. I married in the island of Milos, which is where they found Venus de Milo. I had to be baptized Greek Orthodox to get married in Greece for a Greek wedding. There are plenty of people that get married in Greece, but they they have like different type of weddings. We did Greek style because my wife is Greek, but in order for me to get married in the Greek Orthodox Church, by the Greek Orthodox Church, I had to become Greek Orthodox and baptized Greek Orthodox. So the thing is, I spent so much time in Greek churches over the last 15 years. I know exactly what those what it sounds like. So Miguel said my cat took off thinking a tornado was coming. Patricia says, Greek God singing, now my day is complete. Oh, I'm sure some of your ears are bleeding. So anyway, if the euro does get up to the 110.60, you gotta take that as a blessing and say, thank God, it got up there. Because that's the place where ultimately I would like to leverage up to be on the short side of the euro. But that would be up at 110.60. The question is, are we even going to get up there? That's really the question right now. But you can see where support is. Support's pretty clear right now. And support, I mean, I know this is a tight trading range. We might actually break out of here while we're on air today. But the support, and while we're above 109.60, I think that's pretty key support for longs today. Okay, 110.60. But you see this really tight, or 109.60, I'm sorry, 109.60. This is a pretty tight trading range. If we break below 109.60, then, anybody who's long, especially from overnight, you're going to get them probably out of the market. One of the reasons why the euro's up higher too is, well, it got it. You know, it's just I think a squeeze got provoked by the kiwi and the euro pound, and then you got the Greek Parliament vote that passed as expected, but just some reasons to squeeze the euro higher. But I think the upside is going to be limited, so you gotta pick your battles. Obviously, um, I'm already on the short side of the euro. My cost average is at 55, but I really wouldn't mind shorting a full size position up here at 1060 if I could get it. Okay, let's take a look at the cable. So the cable is obviously underperforming today. The pound broke down because of retail sales, and as Paul pointed out, the retail sales are extremely, I mean, weakest since 2013 is what he had said, like a string of data that was that weak. I mean, that's pushed the pound back down towards, now remember remember I'm redrawing everything today, so I mean, remember how we talked about 156.75 being key resistance? We went as high as 156.70 and reversed. I kind of wish I was awake during that when that happened, um, but man, it turned really fast. Okay, and obviously it's capping us. Support is 155 and a quarter, and so this is our range. 155.25 and 156.75. So let's say, and this is still in a range too. Let's say that the euro backs away from these levels, and let's say it just doesn't make it up to, 110.60. All right. If it doesn't make it up to 110.60, and let's just say it's, we get strong weekly unemployment data, crude oil breaks down, gold, has recovered a little bit, and it gives that back, and the dollar starts to get bid. Well, if that happens, and the euro rolls over, I think the pound is very capable of breaking down today. Okay, I do not have a short in the cable right now, and I was short the pound New Zealand overnight, and I made, uh, you know, 370 pips in the pound New Zealand, but I'm not short the pound dollar. But I'll tell you, the pound dollar looks very vulnerable, and because you have to imagine, the euro's been squeezing higher over the last couple of days, and it just hasn't pulled the pound up with it. Now, with you got weak data, the pound is a a, a target for a long liquidation now. Okay, so watch the cable to the short side. Okay. Uh, let's see here. Let's go to the Swissy. So the Swissy is pulled back, and I'm still long the dollar Swiss. I'm actually on my cost average. I'm down 12 pips, but I'm still long the dollar Swiss. I'm you have to use these opportunities at 95. You remember the breakout point is 95.40, right? Let's go ahead and let's go over to a weekly chart. Daily chart. Sorry. Okay. Any dip to 95.40, you got to use it as an opportunity to get long. Ziggy, who records these videos, he was in the chat room. He's like, man, I picked up the dollar Swiss at 95.35. Gift. It was a gift. Okay. Do now, if you go, well, the euro's been so strong, I don't know if I should buy the dollar Swiss. Do you know why the dollar Swiss is a good pickup right now? Why do you think the dollar Swiss is a good pickup right now, guys? Take a wild guess. Why is the dollar Swiss I pick up down here? Forget the dollar for a moment. How about the Swiss? I'll remember all my lines got deleted, so I have to redraw this stuff. This is the Euro Swiss. That's a 4-hour chart in the Euro Swiss. You see it? Swiss longs are getting hit. Okay. And so this dip in the dollar Swiss, you have to look at it as an opportunity down here because even the Euro Swiss is starting to move higher. That's a squeeze, guys. That's a squeeze in the Euro Swiss. The Euro Swiss takes out 105.20. Okay. I mean, that this is where it really starts to get gnarly. Like Swiss longs start to get smashed here. So going back to the dollar Swiss, we're retesting the breakout point, which if you look at it from like a, you know, probably something like this. It's like just flagging right into support here. So that low today comes in at 95.25. It's going to be pretty key support today for this one. 95.25. It's key support for longs. Resistance now, if we take out 96.10, it's still bullish because we're still holding it. All right, let's go over to the Canadian. So the dollar Canadian. Now it's pulled back. I mean, you have to imagine that this is, we're going to find resistance here. Now we were trying to do a pennant yesterday, but the move in crude below 50 didn't produce a breakout, and I think people just got frustrated with the Canadian, not getting that breakout. A lot of long wicks up there, and pulled back with general dollar weakness. But I mean, look at the dollar Canadian, and just you have to imagine this is like major. I mean, major, major. I mean, over, under, Roger, over. This is major, major resistance here. Big. I mean, like, there's no if and or buts about it. Okay. So we're sitting here just knocking our head right up against resistance. Of course, there's going to be some profit taking up here. And I added a little bit more dollar Canadian yesterday too. I should have waited until we actually broke out, but I thought the move lower in crude would have produced it. It hasn't, but I'm still holding in my dollar Canadian longs, and I have no problem being long the dollar Canadian either. And what you'll notice is it's still extremely buoyant. Dips are bought, and as long as we're above 129, we could dip even to 128.50, 128.30, and still be bullish. But for now, dips to 129 are going to be very well supported, and we're 129.50 isn't even being touched. And yesterday we went down to 129.18, and it was just scooped right back up again. So, but we do have Canadian data today. Keep in mind we do have retail sales out of Canada. We are expecting an uptick in Canadian retail sales to, I think, 0.4%, if I'm not mistaken. I have to go double check here. Let me do it right now. Canadian retail sales, core retail sales at 0.7, retail sales at 0.4. So we're expecting an uptick in Canadian retail sales. Now, If it comes anywhere below expectations, though, the dollar Canadian can rip right back above 130. So strong Canadian data will push us right back down to 129.20. So let's just put down support at 129.20 first of all. Resistance is going to be 130.65. I mean, how high did we go yesterday? Yesterday we went as high as 51. I mean, so just any rally up there, we're finding resistance, tough resistance up there. Okay, let's go into. Oh, I forgot the yen. Oops, and this is bullish still. The dollar yen. We are still holding above this. Remember, we wrote down 123.70 is really big support, right? It was right here a couple of days ago. And we dipped slightly below it, down to the 57 level, but really we're still holding. I mean, you look at 70 and how well it's held. Even spikes down here are holding. I mean, that also suggests that this 123.57 is support right now, but you can see it's really breakout point, resistance, resistance, okay. Resistance over here, resistance, support, support, you know, obviously support. Very key level. Now, just because it's you write down 123.70, or if we write down 123, like today, I'll write down 123.60. It doesn't have to be to the pip. These are all zones or areas, because support and resistance is not an exact science. Never is. Wish it was. My life would be so much easier if technical analysis was just precise. I mean, yours would be too. It'd be fantastic, but it's just not the way life works, nor technical analysis. So with that being said, this is all an area. So I'm going to write down 123.60 as being support, and it's got to hold, because if we break through there, you're going to start a much larger pullback. So I think you got to watch, obviously the futures here, equity markets, and if equity markets come under pressure, that's going to be problematic for, um, the yen pairs. The yen pairs are probably going to come down as a result. Let's take a look at resistance. So resistance today for the yen, this is an hourly. I mean, I guess any move up to 124.15 is going to be resistance. It has been, so we got to just kind of take it as a range, because that's what it is. Okay. And when I come back, we're going to do the Kiwi, the Aussie, the dollar index. We're going to try to do the peso, which obviously it's holding now solidly above $16. I mean, it's pretty huge for the peso. We'll look at the Norwegian krona, the Swedish krona, when we get back. So don't go anywhere. I'll be back in just a few moments. Thanks. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let's go ahead and get over to the Kiwi. All right, so the New Zealand dollar. So I shorted some New Zealand dollar today. And if you don't know why, or you're just tuning in, I'll let you know. So this is, we've had this drawn out for a while, and I had to redraw everything, and I did it last night. And I wanted to highlight two different trend lines for you, because I wanted you to understand where I was going with this. So if you go back before yesterday, okay, so let's go back to here. I had these two trend lines drawn out, and I said, the Kiwi looks capable of squeezing. And when the New Zealand rate cut came out and the Kiwi rallied in a perverse manner, right? Because no one really expected it to. Um, I said, well, if it squeezes, it's probably going to squeeze to that yellow trend line. And if anything, if it gets to the red trend line, I'm going to look to short it. Well, we squeezed to the yellow trend line and you have to imagine this is right after the rate decision. So the rate decision, we squeezed up to 66.50. We stopped there. We came back down. That's when you know I was short the pound New Zealand. I said, you know what, I'm going to hold on to it because what I think is going to happen is we're going to squeeze past to 67. Well, just fortunately for like the pound New Zealand, it worked out because the UK retail sales were bad, so that just kind of perpetuated the pound New Zealand down to my take profit at 233.50 overnight. But the Kiwi dollar rallied to 67 cents, and when we stopped there, and I got up this morning, we were at 85, right? 66.85. Well, I shorted it, and I'm short at 66.84 now. And I'm the thing I'm most worried about is if it gets above this red trend line, and that means it's above the 786 retracement right here, and that is key resistance today. As long as it stays below 67.12, or I'll just write 67.10. 67.10, it remains bearish. Now, if it gets above there, I will have to change my tune completely about the Kiwi, at least in the near term, okay? Because we're going to go from a bearish trend, which we've been in for so long. I mean, when's the last time you've seen this bearish trend go from bearish to bullish or bearish to neutral? It's been a while, right? So that bearish trend will change back to range or a neutral environment if we get above the red trend line. But from a risk reward perspective, this is the place where I feel, you have the really good risk reward. I mean, you're risking, like in my case, I'm probably risking about 40 pips, from being short at the 80 level to maybe making, this gap fill down here to 65.80. So I'm risking 40 pips to make 100. Well, if you short it right now, you're risking maybe 50 pips to make 90. It's still not a bad risk reward from where we're currently at. If it gets much lower, your risk reward is going to be basically even, which doesn't make any sense to be on the short side anymore. So what am I trying to tell you? Well, if you guys are going to short the Kiwi, do it now. Because you can't wait much longer. Because if you wait too long, then you're not going to have a favorable risk reward being on the short side. Now, what other reasons why I don't mind being short the Kiwi dollar? Well, I can give you three, at least, if not more. Just from looking at the markets, being short the Kiwi dollar makes sense to me because A, gold's broken below 1130, and yeah, we've had a $10 bounce today, but so what? It's still broken below 1130. Crude oil is down below 50, and it's not recovering. Futures actually look weak. I think we've gone negative. If not, we're close to going negative on futures. Oh yeah, Dow futures is down 15 points. So risk appetite's waning. So I mean, there's three reasons right there. So for me, it's like, okay, I'll be short the Kiwi as long as it stays below 67.10. Not worried about it. Gets above 67.10, I'll take the loss. But from a risk reward perspective, it makes sense to be short. Now, it doesn't mean I'm targeting, I still believe the Kiwi's going to like 62 cents. This is a weekly chart. This is 20 years worth of data. I still think we're going down here, guys. I just don't know if we're going to be going down here, right at this very moment in time. I still think we're heading down to the 63, 64 cent level. Okay. I don't know if we're going to do it today, but I'd imagine that, again, a move down to 66 cents, maybe 65.80 to fill that gap, that overnight gap by tomorrow. It's possible. It's doable to fill this gap. Okay. But, like I said, if you let it go too much further, it just doesn't make sense to be on the short side. So where's support? Okay. minus that hammer there. That hammer is probably more as a result of pre RBNZ move. So a 15-minute chart. Yeah, that was a little pre RBNZ shakeout. Support should be 66 by the time we get there. 66.40 if we get there. So that's where support's going to be intraday. And if you're like, well, screw that, Blake, I'm gonna, price action is bullish on the Kiwi. I want to get long. We'll get long there. I don't know if you want to get long here. Why don't you wait till it dips and then try it to the long side down there? That makes a little bit more sense at this moment. All right, let's go over to the Aussie. Here's the Aussie dollar. So the Aussie, I'm really disenchanted with the Aussie. I like to use that word when I'm just not excited about anything. The Aussie, I really have no. I'm short the Aussie yen, and I'm long the Aussie Swiss. So I'm down 30 pips in the Aussie Swiss. I'm up 14 pips in the Aussie yen short, and it's basically a hedge because they're for the most part washing out each other, and I really don't have a lot of directional bias with the Aussie at the moment. Um, I just don't. You look at it and it's like, okay, well, the resistance comes in at 74.50 and support is at 73 and a quarter, right? If I'm not mistaken, I'm just, numbers right off the top of my head, 73 and a quarter. I think that's where that is, 73 and a quarter. Yeah. So 74.50, 73 and a quarter, we're pretty damn close to the middle of the range. So what do you do with the Aussie? I don't think you do a whole lot with it. It's in a bearish trend. It's just a slow, annoying bearish trend. So 0.7325, and it's bearish, but it's more annoying than anything. And I don't think there's anything to do with the Aussie at the moment. I'm not saying you can't make money in the Aussie. You know what I'm actually looking forward to doing? I'm actually looking forward to buying the Aussie yen or Aussie New Zealand at some point. Hopefully down at like 110 or so. Um, but I'm not really too excited about doing anything with the Aussie at the moment. All right, let's go take a look at the dollar index. Here's the dollar index. That's a weekly chart. Let's go over the daily chart. So Paul had referenced a 38% retracement. It still comes down here. We have trendline support though, not too far away. 96. Let's just roughly call it 96.65. Okay, that's trendline support. And then resistance. I mean, today's high is going to be resistance, I'm assuming, and that comes in at 97.50. And we are still in a range environment in the dollar index itself. Now let's go take a real quick look. I just want to take a look at the peso and the Norwegian krona and Swedish krona. So this peso, out of control, guys. I know some of you can trade it. I can't, but man, it is out of control. Out of control strong. You could say, well, you know, the crude oil relationship and Mexico doesn't jive anymore. Well, I don't know what else is driving it. I don't know, but we're all going to meet up in Cabo San Lucas here in the next a few months. I think is probably our best idea. Okay, I mean this peso is accelerating. Now we are probably facing some resistance here, real close to. I mean, I have to assume that we're whoops. Caterpillar's revenues miss. Ooh, Caterpillar is down 3% after hours or pre-market. So Caterpillar CEOs on here, just take. I'll come back to the peso. Take a look at Caterpillar pre-market. Ah! Oh my God! Look at that thing. Oh no! Oh no, Mr. Bill. Oh wait, 78 bucks. Oh Nelly, that's not good. Oh no, that's bad. You know what that's not good for? Take a wild guess. Caterpillar is breaking down right now. You have to imagine we're trading right here currently, 77, right? Change. Chris says Caterpillar is not good for Greek singing. This is true because if it was, I'd be singing my ass off right now, but I'm not going to. I'm not going to. That's where Caterpillar is trading right now. You know that what that's not good for? It's not good. That's not good for the commodity currencies. Not at all. See, this is a 38% retracement. Yeah, mining reflective, building. Jared just said mining reflective. You bet, man. Aussie Kiwi, not good. Oops, I don't like that pen color. Hold on. Need a better pen. So, yeah, I mean, look, 38% retracement. We're trading down here. If Caterpillar closes below here, it's going to be ugly. Bad for the market, too. Bad for sentiment. Um, just keep, yeah, I mean, we're breaking some really critical support today. I mean, this low here comes in at 98 and a quarter, and we're trading pre-market at 77. So you watch the close today in Caterpillar. It's not a good thing. Okay. Anyway, back to the peso. So here's the peso. Let's see where this channel takes us. Okay, if we go over to the daily chart, let's take this last drop, right? Okay, we're at the 161% extension, so we shouldn't get much higher than where we're at. We might overshoot to 625 or so, but 618 is really key resistance. Support is going to be at support's going to be at what is this 1588. So I'm going to write that down for those of you guys trading it. 15.88, and then resistance will be 1618. It's going to be really key too. 16.18, really key resistance. Obviously, it's very bullish at the moment. Let's go take a look at the Norwegian krone. Euro just busted a move. Euro just busted to 110.10. By the way, that, and I'm telling you guys right here. So Euro, watch this. The Euro Swiss is busting a move right now. Look at this thing. Euro Swiss is busting a move. Squeezy, squeezy. Nice and easy right there. Yeah, the euro is just squeezing higher. Watch this euro Swiss. It's coming. It's getting close to breaking out too. Um, okay, and we're right at 110.10, right resistance. Now, obviously, we're a couple pips above, but yeah, it's probing that resistance right now. Let's go over to the Swedish krona. and Norwegian krona, because those probably just came under pressure. Wow, the euro is squeezing, guys. Hold on. Look at the Swedish krona. Hold on really quick. There's the Swedish krona. That's a 5-minute chart. So hourly came down just a little bit. Okay, take a look. I drew this out yesterday. You know what? I remember drawing this out. Really key resistance up here. Remember, this is a big pattern too. Big pattern. Um, but I don't think there's anything to do with it right now. And here's the U.S. dollar Norwegian krona. I mean, the U.S. dollar Norwegian krona ticked down a little bit as the euro pushed up, but this is all euro, guys. It really is. It's all euro dollar. It's a euro just squeezing. And I think this one's a big one. Well, you got the euro Swiss that's obviously squeezing. Look at the euro pound. Hold on really quick on the euro pound. Yeah. I mean, this euro pound looks like it's going to follow the same as the euro dollar, which is going to put some downside pressure on the cable. So keep that in mind. So if this euro pound continues to push higher, the cable's probably going to fall right back through 156. Would be my initial thoughts. Okay. All right. Here's your bias chart. So, and it looks like the euro is struggling with this 110.10, but we just pushed right up to resistance.